Seems to me, Wolf, it does justify to the extent to which, if you're talking about monetary stimulus, increasing the Fed's balance sheet, the assets in the Fed's balance sheet from $4 trillion to $7 trillion, it's awfully hard to be short. When you're talking about the fiscal stimulus, I would argue it's more, I don't want to be overly semantic about it, but it's more income replacement than stimulus thus far. So I think, I think people are appropriately starting to discount a reopening and better economic news. But I'm still, I've never been accused of being overly bearish, but I still think we've done real damage to the economy with the shutdown that will take a long time to repair. Now, the market may be just looking through the next year or a year and a half, which it seems to be doing. But, the idea that we're going to be back to kind of where we were in February from an economic perspective, I think, obviously, history would tell you it's going to take a long time to get back there.
Yeah, Jason, I was really eager to hear from you because I was wondering if you were going to capitulate at all off the back of numbers like we got today on jobs, because I know you've been pretty cautious on this market and warning about the sort of longer term economic damage. It sounds like you're not going there yet.
No, I mean, and again, they're two different things. I think related, the markets and the economy, they're clearly, obviously, over the longer term, they have a strong relationship with one another. But I also think that there are times in which they diverge, and they especially diverge when you have the Federal Reserve Board and you have the federal government kind of putting their thumbs on the scale. Now, frankly, if you didn't shut the economy down, you wouldn't have had to do that. And I have a feeling the market would be at all-time highs now anyway. Personally, but I do think that it's just hard to take big victory laps when the unemployment rate's still 13.5%, and it will start to come down. There's no two ways about it. But there's also a sense in which a lot of these industries, like airlines, have not yet laid anyone off. So that there's likely going to be a second wave of unemployment. It seems to be. Of probably higher paid workers, people in supervisory roles. So I want to be clear. I wouldn't short the market here. I just would be careful about joining the bid on cyclicals probably at these levels, because I think it's going to take some time. We have much more of a bias towards the growth sectors because we're of the view that growth will be scarce. Let's say 3 months from now. It depends on what your time horizon is, but 3 months from now, we have a feeling growth will be somewhat scarce. And at that point, you want to own tech, communications, healthcare, things that are growthier, it seems to me.